Hi, Dan.
Good morning, Trevor.
Morning.
I'll just make you the boss. Okay, 1 second, sir. Make presenter. Okay, you're now the presenter. You should be able to show your screen. Okay, we're looking at the RRG.
Okay.
Crypto. Euro USD.
Okay.
Everything seems to be functioning harmoniously. Okay, let's have a look. Right, I make it 9 o'clock, Trevor. I think we can get started.
Okay, go ahead.
Okay, ready? Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having any problems locating them or downloading them, please just let me know and I'll send those to you. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. And the second is a guide which details all the different products that we offer at FX Choice. And speaking of offers we have at the moment, be sure to check out our $500 refer and earn special on our website. It would be really helpful. And if you're watching on YouTube, these handouts will be available and links to the promo will also be available in the description box below the video. For those of you who don't know Trevor, he's a very experienced technical analyst and trader. He has over 40 years of experience indeed. And he was former global head of technical analysis at Bloomberg. So Trevor, over to you, sir.
Okay, all right. Thanks, Dan. Well, a big end to the week with that unexpected employment number causing a big slump in the US dollar. And so we've got a really emphatic return to the weak dollar story that had dominated us for a long time. Then in the first quarter we had a dollar rally, but which has faded, but now I think severely reasserted itself as a dominant theme for the markets, not only the currencies, but precious metals and commodities in general. Dollar weakness is bullish for things. Now, I want to start off by showing you this relative rotation graph. Regulars will be familiar with it, but just very briefly, in the middle here, we've got the dollar, and then we've got the G10 currencies against the dollar. Everything that's right of the vertical axis here is outperforming the dollar. Everything that's above the horizontal 100 point here, which is only the Canadian dollar, is with positive momentum. The samples here are daily, so this is going back over a week here. So what we can say in the analysis here is all currencies, G10 currencies, are outperforming the dollar. The dollar is very weak, and we can say it's the dollar that's weak. And we can see that the strongest, so the furthest to the right, is the Canadian dollar, the Norwegian crown, the Swedish krona, New Zealand dollar, Swiss franc. Here's the euro here, and here's the pound over here. So the yen is outperforming the dollar, but it's of all the G10 currencies, it's doing at least, followed by the pound, the Australian dollar, euro, and so forth around here. Now we've concentrated in this area here in our bullish sentiment, and that's proving to be correct, but there's an outstanding message here in the Canadian dollar. Now you can see the other ones are rotating, heading in a southwesterly direction. That means that they are outperforming, but they're losing some momentum. But there's an exception, which is the Canadian dollar, which is heading directly east, which means that it's gaining a lot of outperformance. So if you had only one currency versus the dollar, it should be the Canadian dollar. If you had two, it might be the Norwegian crown. Doesn't mean that because it's in this direction, it's going to actually underperform the dollar. These are just gyrating over on the right-hand side here. So from a perspective of potential, the biggest one is the Canadian dollar, but all of them look better than the dollar to hold. So let's go to some individual charts now, remembering where the euro was in that group there, outperforming the dollar. But what's the absolute chart message? On Friday, we had that big jump in trading, which took out this minor high here, the April high, was broken, and that's significant. Quite pleased for me because with a weekly buy positive crossover here and the RSI coming down below 50 and turning up through 50, that was a setup for me for a swing trade buy. The last trade that I'd had was right back here when it came down below 35 from below. It was only the second one since the end of March one there at that low. So here we got a new buy from not from my perspective, and not saying you should buy it. It's just that the MACD was positive and the ADX came below 50, and that was a setup for me. Then we flicked back round on Thursday, and then Friday morning the trigger for me took place. The technicals are all looking good in here now. The MACD on the daily chart is positive. So what have we got? We've got resistance. This resistance from February is not very strong. That high there is at 122.42, and then we've got this earlier January high at 123.45. But if you look at the weekly chart, just to see that high, the February high, is really not a significant resistance. And even this one, although it is the high, it's formed in such a way that I don't think it will in fact be resistance. These cigars here are this consolidation area, and the pullback, the big pullback here, met that consolidation, held perfectly from a technical analyst's point of view. So just to sum it up, the euro is bullish. It's not the most bullish. It's probably bullish more because of dollar weakness than euro strength. The resistance above is relatively light, so this can make further progress. On the RLG chart, the pound was even closer to the benchmark, the dollar, than the euro, but still this chart also looks bullish. We broke through the resistance, light resistance at 139.90. We'll call it 140. We're trading above 140. That's a psychologically important level. We're heading towards resistance from the February high at 142.35, but look at that high there. It's a relatively weak high, so I think that we'll have no trouble taking it out. We've got a gentle pattern of rising lows in place. The indicators are all looking good here. The RSI is pointing upwards strongly. The MACD is positive. The weekly MACD hasn't yet crossed, so this one is not on my list of things to buy. You know, there are better things around than sterling, but you know, it's benefiting from the weak dollar. The next one I'd like to look at is the Norwegian crown. This is one we have been talking about and thought was a good one before the Canadian dollar kind of has overtaken it as the best one, but it's still very good, the Norwegian crown. Here is the weekly picture. Look how weak the dollar is against the Norwegian crown. We aren't at support levels here, we're through it, and we have to go back a long way to find any support levels that are lower than the current value now. The MACD, weekly MACD is negative, the RSI is pointing downwards. So here it is. Here we are, the ADX is rising, so the downtrend is strengthening. The RSI is weak, it's gone down below 35, and that's because the market's going down there. And crucially, on a short-term basis, we're paused, I think, to take out this low here at 814.60, and that will add another bit of energy on the downside there. So one of my two favorites, if you like, for participating in the weakness of the dollar is the Norwegian crown. The other one is the Canadian dollar. So let's get that one up, and let's just look at the weekly chart here. Down channel here, breaking this important low. Where did it come from, that low? We go back 10 years, let's say, to find out that's that low, and we're breaking that low now, and that gives us then the next objective is this very important low at 120, And look, that's from 2015 and more or less the same level in 2017. That's a very significant level, and we're approaching it now, and it does look as though it's going to give way here. So shorter term with the daily chart, we're in a downward channel here, and it's making new lows. The indicators are all very weak indeed here. The MACD is negative, the RSI is coming down. I know it's oversold, 14 is a very low reading for the RSI. That makes it vulnerable to a rally. I hope it does have a rally, because that would be a nice place to add more shorts if you haven't got any dollar shorts, dollar Canadian shorts. But this is a very weak market, and you saw on the RRG how that's moving horizontally across. This is taking over the lead very dramatically, and so if you had one currency position, I think it should be a short Canadian dollar versus long Canadian dollar versus the US dollar. If you had two, it would be this and the Norwegian crown. So that sums up the currencies. Now we'll move on to the cryptocurrencies. We've hopefully kept you on the right track here, keeping you in with Ethereum and Litecoin. Bitcoin looked quite iffy, but it's improved a bit, and so the chart is not looking quite so unattractive as it was, but it's still running way behind. Ethereum bursting ahead, breaking through the $4,000 level, all-time high, a powerful move. But this RRG has done a great job of keeping us in the right ones. And if we've got limited resources, Ethereum's been the one, then Litecoin, then Bitcoin to hold your positions. Bitcoin really not, maybe getting a little bit better. But Ethereum, look at the direction. Litecoin, look at the direction. It's heading east. It's strengthening versus the US dollar. It's the US dollar here in the middle. So we've got a very strong and clear message from the RRG charts. So let's start with Bitcoin. My expensive charting system has got itself confused. So here's Bitcoin, and you see Bitcoin chart on its own doesn't look great, does it really? If you just took the name off it and got unemotional about it, it's just consolidating here, struggling with making the high. That's the weekly chart there, and it's got some significant resistance levels ahead. It can break it, that's for sure. The tone has improved, as I said, from where we were a week ago. It was looking quite iffy, but now it's improved a bit. RSI going up, the MACD on the daily chart is going up as well. But the ADX has come down now to 15, recognizing the trend. Energy has gone out of Bitcoin. That's the message of that. But if we go to Ethereum, we have a completely different story here. Here's the weekly chart on Ethereum. Look at that, it's like a missile. Look at last week there. It's gone parabolic, absolutely parabolic. MACD positive, of course. RSI very strong indeed. So on the daily chart, we haven't had a black candle for ages in this. Every day we close higher than the opening. MACD is positive. The RSI is going up strongly. Yes, 96. I mean, it's seen as averaging, and this is almost impossible to get higher than that. I mean, 100% is the absolute limit, but because of the averaging, you're never going to get to 100%. So it's really high, leaving it quite vulnerable to a sell-off and not much support below. So sell-off could be severe in this when it comes, but there's no sign of it. The trend is strong and strengthening, and that is the message. So looking good, looking great. Not good, looking great. Litecoin also looking good, but you saw where it was on the RRG chart in between Bitcoin and Ethereum. So the weekly MACD here is strongly positive. Be long of this. The RSI is looking good. Here we've gone quite parabolic as we break to a new high right now in it. The MACD is positive. The RSI is pointing upwards. Strong and getting stronger is the message of that. It's powering ahead. I think 330 is now support for it. There's only blue sky above, I think it's looking fantastic. But given the three, if you have limited resources, number one, Ethereum, number two, Litecoin, and number three, Bitcoin, which probably is a void really, because of the other twos are good, and it's not really got a great looking chart for the moment. Moving now on to the commodities. Please, if you've got any questions, please ask questions and just send them in the chat box to Dan, and he will interrupt me if you've got any questions that are appropriate at that point. So moving on to the precious metals now. We talked a lot, thank goodness, about this double bottom in place here, and we saw the bullish divergence. So we began to warm towards gold after really not liking it at all. We broke through the neckline, the pullback high of the double bottom here, on this powerful candle, and then we calculated the minimum price objective, which we've just breached on Friday there. So we've reached the minimum price objective from the double bottom pattern. We are getting a bit more resistance ahead of us, but you know, the context is the weekly MACD has crossed to the upside there, so we're trading from the long side again only in this market. We've got the pattern of rising lows in there. It's bounced impressively. The double bottom is confirmed. We've exceeded the target, the 1830s, but as we go, the technicals are actually improving, but the resistance is stiffening as we go up. So look, as you see on the long-term chart here, so this is too long a chart, let me make it more readable for you. The resistance begins to increase as we go up. So I think progress will, up to 2000, will get increasingly difficult. So the momentum will slow, but it is moving ahead strongly, and I think the direction of gold is upwards. But let's look at silver now as well. And before we do that, let's look at the gold-silver ratio. So this is gold divided by silver. Is gold better than silver? Well, this is going down, if you agree with me there, and that means that silver is improving over gold. The performance of silver is improving over gold. It hasn't broken to a new low here, but that is the case. That's the message of that. So let's look at this improving silver performance here. We've got quite a different chart here, haven't we? We've got these two highs at 2985-ish here. So we can draw a horizontal line across there. Then we've got these rising lows. I've made this a dashed line because they don't line up properly, but clearly we've got a rising lows pattern. So that's an ascending triangle. We're middle of the triangle right now, but that's potentially a very bullish pattern, particularly if we take out that, if we take out that high there. We have pulled back 38.2 and seem to have held that. Holding at 38.2, as you know, is bullish. So in the MACD, it's crossing right now upwards. The RSI is moving upwards, so we're bullish inside the triangle itself. Watching this very closely for potentially something extremely bullish happening here if we break that 2980 level, and it looks like it wants to do it. The resistance points themselves are not strong, so I don't think, you know, that there'll be a lot of trouble breaking that level. So this does look very attractive indeed from a charting point of view. Just going back on the subject of gold versus the S&P now. So this is, are you better off in gold than the S&P? And the answer to that is no. And this is looking very threatening. This is coming down here. This is gold underperforming the US stock market and threatening this 2018 low here. So this long underperformance of gold, potentially about to have another significant chart point, and by making a new low in that. So yeah, the simple message of that is you're better in stocks than in gold. But I was reading that now when I say this, I'm wondering whether this is correct, but a friend of mine wrote that on gold, the move up from the double bottom on gold. Sorry, this is silver. So on this double bottom, move up from here to here in terms of the value of gold increased by the whole of the value of cryptocurrencies. So it just shows you how massive gold is. It's so big, gold. So that relatively small percentage movement accounted for more than the value of all cryptocurrencies, which we know are massive, but more gold is held. Gold is the asset of central banks. Maybe not one day, but it is where they hold their wealth. Moving now to crude. Over the weekend, I expected to see a burst higher in crude, but there's my understanding of fundamentals. The Brent crude has really gone very, very quiet indeed. We've got this sort of gently rising, steady market, not strong at all, moving towards a very important level, this resistance from March, but also the $70 round number level and an old resistance from way back at 2019. But it's steady, quietly steady, I think is probably the right word. So the moving averages are pointing up now in the right order, that the 20 crossed the 50, so it's 20, 50, 200 here. That wasn't the case. It was a neutral message for a long, long time. Now it's a bullish message. Bollinger Bands are narrowing a bit. The ADX is 20. That's quite a low reading, reflecting the flatness in here. The MACD is positive. The RSI is also positive. It's in the top part and moving up there. So it's looking steady, but not rampantly strong. So it does look as though it's going to go higher. Okay, I'm going to move to the indices now. And I'm
Trevor, can I just interrupt you for a second?
Please.
Yeah, we've just had a flurry of questions that have come quickly, so I'll give them all to you, and then you can decide the best way to approach them. So the first one is we've been asked to take a look at the Nasdaq and ask if whether you think it's bullish or bearish.
Yeah.
The other one is, where are we at here? Do you anticipate a small correction in Ethereum or Litecoin? I don't know if the question was asked by Jamil. Not sure if they missed what you said earlier about Litecoin and Ethereum. And the next one is a question from Patson, who asks, what do you think of the US 10-year bonds? Well, we don't really cover those.
Yeah.
Japan 225, US 100, BABA, and Apple. Wow, there's a lot of questions there, isn't there?
Yeah. Okay, I'll do my best. Yeah. Okay. That's good. There is something very important in that I want to show. Yeah, okay, that's fine. Let me answer those questions very, very quickly. I'm just about to come on to the stock indices, so let me answer the Nasdaq when I come to that. With regard to Ethereum and Litecoin, I particularly in the case of Ethereum, I'm worried. This is a parabolic move here. We haven't got much support. The big support is right back here at around 2,500, some miles away from us. That's where we've got the big consolidation. Since then, we've moved up really, really fast. And so there's, if we were to tumble, there would be very little friction to stop a fall. The rate of climb is increasing. That is bullish, of course. People are buying more intensely, but this is becoming climactic. Vertical is as steep as you can get, and we're near vertical in this, and therefore it is susceptible to a sell-off. But where's the sign? There isn't a sign. Everything is bullish about this chart, except that it's too high. It's extended and vulnerable. But the problem with that is there's no notice given for that, other than I'll give you the notice now. It's extended and vulnerable, but the chart looks bullish. So the problem is these things happen in a second, don't they? And that's the case to a lesser extent with Litecoin, but Litecoin is closer to its significant support levels, and therefore if there was a sell-off, it would be probably less savage in Litecoin than it would be in this very vulnerable Ethereum. So that's that one, and then the Nasdaq will come on to, and then this is a good moment to talk about the interest rates. And for that, and just bear with me a second, I have to just change this list here because we don't normally cover that, and because it isn't our markets. But let me just go here to the 10-year note, the cash, sorry, the 10-year treasury, I mean. And so this is the yield here. So the yield has started to ease off a bit, and that's beneficial. Not beneficial for the dollar, obviously, because you're getting less return on the dollar, but taking a lot of pressure, maybe deflating a little bit the interest rate concerns. But if I may, I'd like to answer a different question, which is the German 10-year note. And let me go to a weekly chart of this, and let's go back for the last 20 years on it. Now this is a matter of how you draw this trend line, but a lot of my colleagues are drawing it like this, which I think is entirely fair. And look at that. This is a trend line which started in 2009, a declining German interest rates into the negative value. We've started to come up strongly now, but I think that a significant change has taken place in German. That's that line there in German interest rates and European interest rates, in that they are starting to rise. They're still at negative values, but they're starting to rise, and that long-term downtrend is finished. That's a big thing, isn't it? Most people's trading lives, we've had declining European interest rates, and here it has come to an end. So sorry, I hijacked your question. 10-year notes, 10 years looking a bit flat, I would say, to easing slightly, but here we're rising strongly here, and this is a big structural change in the market in Europe, and will have implications. So let's move on to the stock indices now, and let me go back to my list.
Yeah, Trevor, do you remember the question? It was so long ago.
It was on the Nasdaq, wasn't it?
Yeah, Nasdaq. We had a request for Japan and Japan 225,
yeah,
and US 500 and US 100.
Okay, better get on then. Okay, so let's start with the US 500 firstly. Nice easy one there. It's going up, and we haven't had a black candle for a long time here. This is a weekly chart. The MACD is positive. The RSI is pointing upwards. It's strong. And then here's the daily chart making a new all-time high, looking very good. Little bit of weakness we had at the end of the week before Friday's move, and then now we're moving ahead again. Strong, looking really great there. I'll come back to individual securities in a moment, but let's do the Nasdaq or the US, the tech. Our tech is not looking so bullish. We know that we'll look at this in a moment. Some of the high-flying stocks, the FANG stocks, are actually looking quite iffy, and the charts are not the best charts on the board. And some of the old things are looking really good. Things that we sort of learned to hate are now looking good, like banks and oil companies, and they've taken over. So it's lagging. So if you were given the choice of whether you should be in technology, which we've got almost used to saying that technology leads as a generation of technology. Well, actually, it's changing a bit now. That old things, you know, with actually infrastructure and value and factories and people and things like that, they are taking on value. So the underperformance of Warren Buffett may change, except for his big holding in Apple. There. But so the Nasdaq is mildly bullish, but it's not. You know, given the choice, wouldn't you rather have US 500 there? And you might even notice the divergence here. This is a very weak new high that we've got in here. We were also talking, as we did do last week, about the N225. We're in this triangle shape here. So we've got the lower highs. It's very clear actually, and slightly higher lows in here, trading rather flat through March and April here, but in the context of an extremely bullish chart. So this is just a well overdue pause. I think it's not really pulling back much. We're inside the triangle. Once it breaks out the triangle, I suppose we're moving towards the top of it now. It could be close. I think we will resume our move upwards. I don't expect it to be particularly, you know, impulsive, you know, like a huge candle. As it breaks, I just think that it will break up and then continue to move up. So this is a long-term trade, this one, but I think this is one of the ones that's got the best and clearest long-term future. The FTSE, UK 100, a new high here, benefiting from the sterling. Actually, no, I mean, making a new all-time high. Why? Because a lot of commodities in this one, isn't there? And it's very light on technology as an index structure. There's only, I think, one big tech stock in it, and it's made up a lot of banks and mines, and banks and commodities are what are doing well at the moment. So it's a good place to be if you're an international asset allocator, because you've got an index which is heavily weighted in that, and a currency which is not too strong. So it's moving up, higher lows in place. The weekly MACD, I always check that to make sure we're on the right side of it. It's been bullish really since 2020. So we're only trading it from the long side, and it's making new recent highs. Looking good, and I think that it should continue to move on higher. I like the look of it. I would say that something worth noticing here is the ADX here is at 22. The US 500's ADX was at 26. The NASDAQ, the tech index's ADX, is at 18. 18 means that this is a kind of trading range market. The highest ADX is the US 500. This has got the strongest trend. They've all got uptrends, longer term uptrends, but this is the strongest one. I did miss out the German 30 here, and this it's got an ADX of 19, so it's relatively flat, not a particularly strong uptrend. It is in an uptrend, however, the higher lows, but it's not as strong as the US 500. But it's close to breaking to a new all-time high, so that we could probably celebrate that this week. And I've circled here when the RSI came down on this candle here and then turned up here. In the context of a long-term bull market, this was as good a dip as you were likely to get in that index. So this is bullish too, but I think it's clear what the order of things is that the leader is still the US 500 by far. Going now to individual stocks, let's look at Apple. So look at that chart. Let's look at the weekly chart of it. It's not great, is it? I mean, if you looked at that chart and forgot that it was a FANG stock and it was Apple and all the glamour that goes with that, yes, it's bullish. We've got higher lows, but now we've also got a lower high here. Some people will be talking about potential head and shoulders, shoulder, head, shoulder, if we break the neckline of 120 here on it. We had the bearish divergence, high, higher high, high, lower high. This is not a great stock. Amazon, again, it's hesitating at the high here. I think this is probably going to break the high. Going now on others, let's go to Google, to Alphabet. This is looking great. This one is terrific. And so this is the best one of the FANG stocks, and actually almost on its own, really, there. No, sorry, Microsoft too. But let's look at Netflix, for example, another glamour stock, very flat here. Isn't going up like a missile. What about Tesla? Okay, I think a lot of people breathed a sigh of relief when he was on the Saturday Night Live that he didn't say anything too mad on it, only a little bit mad. But there again, look at that chart. Is that really a market leading security? I'll tell you what's a market leading security. Exxon, look at that, breaking its high here powerfully here. We have got resistance, of course, because these have been sold off so hard. This weekly chart here, I think we're heading towards significant, upwards towards old resistance, of course, but there's a lot of swing potential in this coming up from low readings. So old oil is looking good, and then also the banks. So if we look at JP Morgan, for example, here, look at that, making a new high here. We've learned to hate banks, haven't we? But now the banks are looking good. Bank of America, too, new high being made here. Chart looking great. If we come to Europe, HSBC is testing its highs. It's not breaking through it. But if we go to Santander, which I do like a lot, Santander is pushing ahead strongly. So European banks also looking good. This is Santander weekly chart breaking when it broke through the 3 euro level. It released a lot of energy. Of course, these markets have all been so sold off that there is resistance above, but there's a lot of bounce potential in them, which we're seeing right now. Even Deutsche Bank. I never thought I'd say the day that I liked Deutsche Bank, but here it is going up there. That's the weekly chart of it, and here's the daily chart of it here now, looking really good chart there. Okay, do we have any more questions?
Trevor, I think we are at a request to look at Alibaba.
Oh, Alibaba, okay.
Actually, I'm not even sure. Yes, Alibaba is covered, isn't it?
Yes, it is. In the States, we cover it. So Alibaba, of course, a high-flying tech stock, but there's not a very good-looking chart, is it? Quite a vulnerable chart. We've got lower highs in place here, there, and then higher lows. I think I can draw it from right back here. Maybe not. I think I won't. That's a badly drawn trend line. But so we'll draw it from this low here. Yeah, that's better. Inside the triangle, could break up, could break down. We've got a steeper slope downwards than the slope of upwards. That means the bears are stronger than the bulls. The MACD is negative, so for me, this is a bearish security. This is the weekly chart, so I can only trade this from the downside. The MACD is weak. On the daily chart, well, this is what we're seeing here. So we're threatening. The uptrend line would be up through here. We're threatening the lower side of a triangle, which has got a steeper upper side to it, more likely to break down than up. It is selling off in the short term. The MACD is negative. The RSI is negative too. It looks vulnerable. It really looks vulnerable to moving down. We're closer to the breakdown point in the triangle than the breakup point. And we see that the bears are stronger than the bulls.
Okay, thank you, Trevor. We do have one more question.
Yeah, sorry, that was Facebook. Okay, yeah, go ahead. What's the question?
We do have one more question. It's again from Patson Chandler. Thank you very much. Oh, it's a bit of a difficult one, maybe, but he asks, which stocks would you hold until the end of the year? Top 5 growth stocks.
I'm not going to answer that question.
I thought so. I thought maybe you would do. Seems like you've been quite bullish on some things.
Yeah, that's a very big question.
Yeah, I think so.
And anyway, I would never even think about it. I've got no clue which are the best 5 stocks going to be at the end of the year. And anybody who says they can answer that question is fooling themselves as well as anybody else. You know, we're at May. Okay, what's going to be the best 5 stocks at the end of the year? I know people answer that question really confidently, but when you think of it, it's anybody that does answer it is really delusional to say that they can do that. I can tell you what I think now will be the strongest, but every day is a new piece of data, and I'm very likely to change my mind. A pandemic may happen. It's that's a little way away. And only fundamentalists make those sort of crazy, and you see how right they are about things. So I'm not going to answer the question.
Okay, well, thank you very much, Trevor.
Okay.
No.
I just can't answer the question because I don't know.
No worries. No worries. Well, thank you very much for attending, everyone. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in an hour or so's time. So if you came later and you want to watch from the beginning, or you just like to watch the whole thing again or a certain piece of it, you can go over to our YouTube channel and don't forget to click the bell to get notified. Okay, Trevor, anything else to add?
No, I think, bear in mind the implications of a weak dollar and on many other securities. mostly that means bullish for the other securities. So, you know, if this is really gathering momentum, which it seems to be doing now, a resumption of a long-term trend. I know it's been short-term bearish, but, you know, we did have in the first quarter a big rally in the dollar. Is over. Seems to be, you know, this could really start to accelerate here and change things a lot, but mostly to the upside. So thank you very much. Good trading. Thanks, Dan, for looking after us. Thanks for the questions. And forgive me for not answering that last question, but you know, that you can get on the internet, you know, from all the experts there. Okay, thanks very much indeed. May the trend be with you. And
thanks, Trevor.
Okay, thanks. Bye-bye.
See you next week. Bye-bye. Bye-bye. Bye-bye.